Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to Pasture to Pin, a new series from the Ever.Ag Insights team. Each week we will bring you news and updates on the cattle markets with the intention of helping cattle producers manage their risk. I am your host, Michael Todd Rowen, coming to you live from my home office in the Texas Panhandle, joined by my co-host and teammate, Mr. Trey Freeman. And before I introduce our guest for this episode, I will timestamp the episode. Today is Tuesday, May 23rd, 2023 at 3:10 in the afternoon. On this episode, we will be hosting the man, the myth, the legend, and Ever.Ag Senior Director of Global Grain and Feed, Mr. Jim Matthews. Jim, welcome to the show.
Thanks for having me, guys. This is pretty awesome being on this show. It's a great show. Hopefully the viewers find a lot of value in it. I know I do, to learn more about the livestock side of things. So very excited to be on as a guest. Thanks for having me.
Awesome. Absolutely. Well, the weather has been treating us very kindly here in the Texas Panhandle. It has given us a little bit over an inch of rain in the last few days. Trey, how have things been looking in your part of the plains, good sir?
You bet. Oklahoma Panhandle, northern Texas Panhandle, we got about an inch and a half this weekend again. So a couple weeks of 1 to 2 inches. So looking great. Looking forward, forecast for the next 7 days, Kansas, western and central Oklahoma, Texas Panhandle, looking good. 5 out of the next 6 days here in the Panhandle, we're looking at getting some rain. So I can't remember when we've had that, the last time we've had that.
Yes, that is going to be very nice. And even on up into Nebraska, Wyoming, and parts of the Dakotas are getting rain as well. Really all of the central United States. So there are a lot of people that agree with you, Trey. Things are looking great from a moisture standpoint. Switching to the board, Mr. Freeman, I'm seeing a little bit of red today, but overall the last couple of weeks we have been trending higher. Can you take us through what's been happening on the future side, please?
June live cattle continue to trade at a sizable discount to cash. Historically, June tends to soften into the first of the month before posting a moderate rally into expiration. So seasonally, this discount, it's not much out of the ordinary. They've made a run to 166 in the last 5 out of the last 6 trading sessions, have failed to close over, but we continue to make a run at it. That 166 is pretty heavy resistance at this time. May feeders go off the board Thursday, so expect some volatility over the next couple of days. Now, August feeders, they're over $10 a hundredweight off the low posted 2 weeks ago, making a new contract high Friday of last week on account of the continued pressure in the grain markets. Now, the big thing that sticks out to me in the cattle complex is the spread in cash feeders to August feeders. Now, we've seen nothing but August continue to build a premium to cash feeders. Over the last 4 weeks, August has gained over $11 a hundredweight to May feeders. Now, are those deferred feeders getting carried away and looking for a repeat of 2014? Currently, it sure looks like traders have their scopes narrowed in on that 245 that was posted in the fall of 2014. So looking forward, expect hard bark from the cattle complex. Supply fundamentals are well known. Pullback should continue to be viewed as buying opportunities. Fell in demand or some sort of recession or struggling economy, they're the only real threats that may loom over cattle at this time. So again, bottom line, I'd expect external forces to have limited impact moving forward. Not to say volatility won't remain. So leave the emotions out of your risk management. Be wary of being lulled into doing nothing. And practice discipline.
Very good. Thank you very much, Trey. Looking at the cash and fundamental side of the market, Friday saw a cattle on feed report released. Very, very close to estimates across the board. On feed as of May 1 was 96.6%. The average estimate was 96.5%. Placed was 95.8%. The expected was 96.4%. And marketed was almost dead even, 89.9% actual compared to 90.2% expected. Retail data remains fairly strong, especially if you look at the cutout. We saw some weakness in cutout prices last week with choice working its way below 300 midweek, but has since popped back up to 303.90 as of yesterday. This pop-up was led mostly by chucks and rounds as consumers continue to make it clear that They want beef, but they want beef at a cheaper price point, and specifically from cheaper cuts. Lighter carcass weights can also send choice prices higher. We've seen carcass weights trending lower over the past few days. Jumping to the feeder cattle side, like Trey said, the board is pricing a $26 jump between May and August. The feeder cattle index is currently at 206.76, just a hair over $1 discount to the futures. Who will pull who along for the ride? Sale barn data may be giving us a little bit of a preview. Normally this time of year, we can see a few 10,000 head sales between May and June pop up. Those volumes are not there this year. When feeders do show up to the sale barn, it's much less than 10,000 head, and those feeders are very, very expensively priced. With these high-priced feeder cattle, feed yards have been very, very tough negotiators. Cash-fed cattle prices remain in the 170s live for North and South, making it a positive basis over futures anywhere from $5 to $10, depending on, again, if you're in the South or the North, and in the low 280s for dressed prices. Any attempts by the packers to bid cash lower have been passed by the feed yards, forcing packers to pull contracted cattle forward rather than rely on the show list. This has been a double-edged sword because as packers pull those contracted cattle forward, given the positive basis, feed yards are not in a hurry to take a discount and help packers refill those forward contracted cattle, forcing them to buy from the tough negotiated show list. But no cattle, no packer. So what is our wild card here? Well, that is why Mr. Jim Matthews has joined us today, because our wild card is grain prices. Jim's everyday role is in the wild and wacky world of grains. We will let Jim talk to us on the grain and protein side of the equation. Jim, again, welcome to the show.
Thank you. And also, I am personally a wild card. So that's also why you had me on the show.
That is a very cattleman thing of you to say. It is very cattleman to be a wild card. So we appreciate that.
Good deal. Yeah, there's it's an interesting time of year for the grain and feed markets. For one, we are, of course, very much focused on planting for that new crop year. So everybody who is growing corn right now and has recently planted it, a lot has emerged already. So many folks are trying to remember what it was like last year when planting was very delayed at this time of year. It was been a very exceptional year in terms of how wet and cool it was in the Midwest. So this year, it's been a very nice change of pace. We've been able to get this crop in the ground early. We are ahead of the 5-year average on corn plantings. So we get that report from the USDA every Monday afternoon, that crop progress and conditions report. So right now we get the crop progress. We will start getting the actual conditions for corn starting next week. But the key takeaways is that across the I-states, especially Illinois and Iowa, has now caught up to, we are ahead of pace. We will essentially be done planting corn in some of the key corn areas of the United States within the next week or so. So great to get that crop in the ground before Memorial Day. The wild card, as we have referenced now at this point, I think is the upside risk from a weather standpoint. We talked about weather to start the show here a bit. It's definitely going to impact the grain markets. We are already seeing that in the last few trading sessions. And we've talked a couple times about the meltdown in grain, how that's very beneficial to those that are purchasing corn for feeding purposes. We were very happy to see December futures ultimately break that $5 threshold last week. We got down towards $4.90. The only issue is folks are unwilling to step in and really hammer those sales now at $5 or below. So just in the last few sessions, we've seen December corn futures creep their way back up towards $5.20. Today, we were trading around $5.15 or so as we closed up this afternoon. We're heading into a 3-day weekend with Memorial Day coming up, and things are a bit dry. I think it's far too early to really start yelling that evil word drought at this point, but it's been dry enough in some key areas including Illinois, that were beneficial to get that crop in the ground. But if it maintains this level of dryness going forward, especially into that psychological 4th of July stretch, it's going to start putting a little bit more stress on some of these areas. So from a supply and demand perspective, fundamentally, I think we've all been excited to see, again, from a corn buying perspective, excited to see these prices come down. I think the balance sheets ultimately dictate that prices should remain under pressure in both the U.S. and South America. However, that upside risk, that wild card, is going to be weather as we move into this Memorial Day weekend and through July 4th.
Thank you very much, Jim. That was a much needed grain update. And for those of you that do not know, you can see Jim on his show titled The Grain Feed, as well as give Jim a call to talk about all your feed needs as he heads up the Feed Foundations team here at Ever.Ag. That is a wrap for this episode of Pasture to Pen. Thank you to all of our viewers for watching this episode. If you have not done it yet, hit the like button, hit the subscribe button, and hit the bell to be notified of future episodes. Thank you, as always, to my co-host and teammate, Mr. Trey Freeman. Thank you again to Jim for joining us for this episode. As always, a big thank you to Paige, who always helps us look our best. A big thank you to Corey and the entire Ever.Ag Insights team for making the show a reality. Until next time, stay safe and pray for rain.